Hey, what's up, guys? Brad here. So today I want to talk about, is value investing dead? There's a lot of talk about, value investing may be kind of past its heyday, especially with Warren Buffett as the poster child of value investing. How, Berkshire Hathaway's returns over the last 2 decades are nothing like they were in the previous 3 or 4 decades. So, is value investing dead? Let's talk about it. First of all, what is value investing? Okay, let's define it. Value investing is an investment strategy that involves buying securities, stocks, that appear to be trading for less than intrinsic value. Okay, so what is intrinsic value? What is the actual value of a stock, of a share, of a business? So one way to calculate intrinsic value is to estimate the future cash flows of the business. Okay, what cash is the business going to produce for the rest of its useful life? Okay, until the business no longer exists, and then discount that, those cash flows back to today's value, because money has a time value. It's worth more if $100 is in my hand right now versus if somebody tells me they're going to give me $100 a year from now. I'd rather have that $100 right now in my hand. So there's a time value of money. So you want to discount those future cash flows back to today's value. Now, obviously, it's a lot easier to value a business if you have a lot of track record for the business. If the business has been around for a long time, if the business has proven that it has a moat or a competitive advantage in the marketplace, okay? It's able to fend off competition for whatever reason. It has some intrinsic characteristics that enable it to ward off the competition and maintain a strong business. Now, it's a lot easier to value a company who has a long track record, okay? Because, in a lot of cases like that, you can pretty much assume, okay, the near future of that business is going to look similar to the recent past, because you have all of this data to work with. You have a long track record. Now, it's harder to value a business where most of the economic activity of the business is in the future, right? Maybe it's a young company, a startup company, even Tesla. The value of Tesla, if somebody were to value Tesla, the vast majority of the cash that goes into the value of Tesla has yet to come. It's in the future, okay? Same with companies like Uber. A lot of these younger growth companies, even Amazon. Like people are valuing Amazon based on what Amazon is going to do in the future, not what it's done in the past. Even though, we have about a 20-year track record for Amazon, people are very optimistic about what's coming for Amazon into the future. So here's another problem here. In the Investors podcast, Mohnish Puri was being interviewed, and it was brought up in 1965, the average tenure of companies in the S&P 500 was 33 years. Okay, so you make it into the S&P 500, in the 1960s, on average you're going to be there for 33 years. Now by 1990, it was only 20 years. Okay, so companies were dropping out 13 years faster on average by the time you hit the 1990s. And as of today, based on the numbers we're seeing now, if we project 6 years out from now, the average tenure in the S&P 500 is going to be 14 years. That's the estimate. So you go from 33 down to 20 to 14. So today it's a lot harder to find companies, to pick companies that have a long time of compounding growth ahead of them. Okay? It's a lot harder to find the Coca-Colas, the Gillettes, the See's candy today than it was, back when Buffett was kind of at his peak returns. So, this is a big challenge for value investing, because one of the core tenets of value investing, or at least most value investors, go after companies that have a long track record of success, established players, okay? Because it's a lot easier to value those companies. There's many fewer projections or estimations of the future that you have to make in order to value a company who's established, who has that long track record. But like I said, the problem with that is there's fewer and fewer of those companies that are able to maintain that moat. They're able to maintain growth for decades. So, the old method of value investing, it seems like it's not working as well as it once was, because of the shortened lifespan of companies in the S&P 500. So that doesn't mean value investing is dead. What it means is value investors have to shift their approach. Okay, you can still buy Tesla today as a value investment. It's harder because there's a lot more that we don't know about Tesla, what it's going to do into the future. But if you do well at valuing Tesla, if you pick an appropriate growth rate, if you understand the business well, it's possible to come up with a reasonable value of Tesla. And then at that point, you simply wait until the price, gets below enough from that value that gives you an adequate margin of safety. And, you buy Tesla, and you can still do it as a value investment. So it's not that value investing is dead. Perhaps the way that Buffett and his predecessors did value investing it's not as effective. Okay, that's kind of how I'm seeing it. You've got to get better and better at figuring out how to value these growth companies, these tech companies that are really dominating the S&P 500. If you look at how the S&P 500 has performed in the last 20 years, it is really dominated by these technology companies: Microsoft, Apple, Google, Facebook, Netflix. I mean, these companies, they really represent a large portion of the returns that you've gotten if you've been investing in the S&P 500 over the last 2 decades. So, maybe that will shift. Nobody knows. But it seems like there's been a shift in value investing from buying a company at a discount, a company that's maybe not growing as much, or a company that's been established for a long time, assuming that it's going to continue, that nobody's going to be able to knock it off for decades to come. That seems to be shifting. So, value investing is still alive and well. It's just, I think it's become a little bit harder to, value businesses that tend to be the ones that are performing well in our age of technology. Requires a lot more projection, and it's not so much anchoring on past numbers. It's understanding a business and how it's going to kind of shape the world moving forward. So, and I wanted to plug Mohnish Puri, for ever since 1995, so 25 years. For the vast majority of that, Puri has been looking for 50-cent dollar bills, okay? Companies where he can put down 50 cents today, and he'll get $1 back in 2 or 3 years, right? Now, he's shifting that approach. He's no longer looking for 50-cent dollar bills. He's looking for companies where you can maybe get a little discount, but they're growing pies, okay? They're not just discounted pies, they're growing pies. but they're not growing pies that everyone knows about. They're not the, compounders that everyone already appreciates, like Moody's and Costco and, Visa, MasterCard, these great businesses. They're compounders that are hidden compounders, okay? They're compounders that very few people understand them to be compounders. So actually Micron, I believe, is one of the companies that Pabrai has identified as a hidden compounder. So we'll be digging a lot more deeply into that one. But I just wanted to share kind of my thoughts on whether value investing is dead. I don't think it's dead. I think it's, value investing is always going to be around, okay? That's really the definition of investing, is buying something for less than it's worth, okay? It's how you determine what it's worth and what ponds you're fishing in that I think are shifting. So that's all I wanted to share, guys. Let me know what you think about value investing. And yeah, what you think about hidden compounders. I'm really excited to see what Pabrai comes up with in future 13F filings for these hidden compounders. All right, guys, that's all I got. Smash that thumbs up button if you like this video. Hit that subscribe button. I'm just short of 700 subscribers, and I'd really like to hit that 700 mark. All right, guys, take care. I'll see you soon. Bye.